I'm going to try to cover both AMC and the SPY today in 5 minutes. Here we go. Starting today's video on patterns for candlestick chart patterns. This is Bulkowski's pattern recognition software. I thought I would pull this up every single day just to see how it goes. There are a few different open patterns currently with price targets in the low teens. Let's see here. What do we got? There's a narrow range 4 here, and you can see the approximate target's $14.93. Of course, we're not there yet at all. Then there is another, oh actually that was a narrow range 7, a narrow range 4 with a similar price target. Well, it's not, it's a little higher at $16.30, but nonetheless. Today's candle did form a recognizable pattern. It has it labeled as a spinning top, and you can see this in the bottom left corner. It forms as a reversal 50 to 51% of the time. I think that in the middle of this downtrend that we're not going to see the reversal. In fact, when we zoom in, I'll show a failed V-type bottom. So I'm just going to go ahead and head that way and pull patterns down. As you can see, I have the AMC daily chart pulled up with my trend line analysis. This yellow line in the middle, this is an internal trend line. It's based off of where the first corrective wave of the run down broke. And as you can see, it's doing a pretty good job defining this stair-step motion that AMC is making. And today, you'll see a very tall wick, and that wick occurred precisely at that internal trend line. The RSI is starting to move deep into the oversold area. I've been talking about this for weeks. The RSI can stay down here for quite a long time. I was expecting a little bullish bounce today, and it looks like that bullish bounce did happen, but it was also reversed within the same day. So the RSI is coming down. Volume was low. As I said, this is probably a corrective bullish rejection. I'm not really worried about implied volatility dropping. It was annoying, but I'm starting to use deep in the money puts to hedge my out of the money puts, and I'm actually going to start using an allocation. I'm going to go 90% in the money puts, 5% at the money puts, and 5% out of the money puts when I'm in a bear trend. When the price reverses eventually and starts going back up, I'll do the same thing with calls. The idea though is just to hedge against these losses due to the drop in the implied volatility. So I'm going to be losing most days. I'm working on managing my losses and setting up really strong trades that protect me generally, and when things make big moves, that will allow me to make money on those moves. So for instance, if the price doesn't move my way, I have my hedge. I can back out and take little hits all year. As long as I get a few really good trades, I can make money on those trades. And it's going to be a work in progress, obviously. I want to be really greedy and have all this cash to put a bunch of money into really lucrative options in these big clear runs, but that's not going to be most days, and I'm going to have to learn how to minimize my losses if I'm going to be trading every single day, which I am, and I'm going to. Although I shouldn't trade every day, I definitely am, so I need to learn the skill. Anyway, I'm going to zoom in on this daily candle. I'm going to go to the 15-minute time frame. And here we go. You can just see this, right? Doesn't this look like a pennant? Do you see the pennant? I see a pennant in here. Let's see, we start down there, we have a line here. There it is. Consolidation over the last 2 days after a big drop, a big dump. And it's really interesting to see that big gap down was over that internal trend line, right? And then, you know, this wick, look where it reaches. Very nearly touches that trend line. So I'm going to break this down one more level, go into the 1 minute, and pull this up, blow this up. Right, so you can see that implied volatility for most of the day was actually dropping. Right down here, you see this? This is a big decline. This absolutely kills out of the money options, and that's where I make the most money when I'm making money. Although I anticipate that to change. So that was unpleasant. The volume trend was really low, and there was times when the volume seemed like it wasn't even really there. It was just absurd. Like, you know, here we go. 23,000. That's so low. Nonetheless, the price did mimic the SPY for most of the morning until it decoupled when the SPY, before the SPY's big dump, and then they seem to realign right here. And you'll see what I'm talking about when I pull up the SPY. Nonetheless, I just want to show really quickly this is what my chart drawings looked like today. It was chaotic. Look at all these trend lines. I was like, consolidation here, big run down. I thought that this was going to be a 1, 2, 3 and go further, but it didn't. Instead, this consolidation here caught me off guard, and I actually held through this. This run up was nasty, but I held just simply on the merits of the low volume. The volume trend was just down. And as implied volatility dropped, I knew that this wasn't going to be a run. This was just a consolidation, a little rise in the price. I was expecting this to happen up at the 2080 level, and then it happened much, much lower. I don't think we even broke 19 here. Let's see here. The high was 1891, right? So this happened at a lower price than I thought, which is bearish, more bearish than I was thinking. Now, what I'm showing here is a bearish divergence in the price. So if you take the price at, there we go, at the end of the candles, not the wicks, the bodies, and then we look at the RSI, you're going to see that the RSI was in the overbought region, set a high, and then set a lower high as the price made a higher high. This is bearish divergence. So right here I said, hey, that looks like a double top, cat ears, whatever you want to call them. And when the price passed this low here, this new trend line was formed, and I said, okay, that was a big signal too. To see the price move like this, kind of spinning, was really interesting on such low volume too. It was very wild. The price did make a big move and then was rejected immediately, and I held through this too. It was just a wild day today, really interesting. Eventually the price did dump with the SPY right here, and then fell even more and sank into the close. So at the end of the day, I ended up holding my deep in the money put, just in case we see a gap down. It's the only way I can trade that intrinsic value. And if I hold that deep in the money put overnight, that means that if I sell it tomorrow, TD will actually give me the funds to trade with immediately. I won't be stuck in clearing. So I'm kind of trying to play my trades so that I free up the most cash, because the real problem with deep in the money options is their cost, right? And my account's barely big enough to buy one deep in the money option. So I have to make sure that I have those funds available. It does mean that I have to commit to the trend analysis too. Like if there is going to be a big reversal happen in pre-market or after hours, I'm going to be susceptible to those losses. So I have to be really good with my risk exposure there, understanding where the trends are and what the price could do if it goes wrong. And at this point, I'm feeling pretty comfortable that some of the biggest, darkest days are still ahead. So I know it's like, oh, Cap, he's bearish. Yeah, that's just the analysis. Like if it were bullish, I'd be trading bullishly. Like why would I trade bullishly in a bear market? That doesn't make sense. Anyway, that was a SPY. Obviously, not gonna make my 5-minute mark. I forgot about that. Good God. What am I at? 9? Okay, whatever. Whatever. The SPY is next. Let's see here. Okay, so here's the S&P 500 ETF. And on the 1 minute, I don't chart this very much. I watch the daily candle, to be honest, and I don't even pay that much attention to the SPY in terms of analysis, but oh, I have something pulled up here that I don't recognize. I don't know what that is. Oh, this was my RSI study. I remember I was making a buy and sell indicator with the RSI, and well, it was going well, it looks like. Looks like those buys are low and the sells high. But that's not what I want to show. Okay, here we go. So everybody talks about this wedge, and I have charted that wedge before in the past. It was quite a while, I don't remember when, but it ended before an inverted head and shoulders formed, and then the price popped out and up. And now we find ourselves in this broadening top, or this broadening ascending wedge, and it also does have some striking similarities to a head and shoulder top as well. So I'm going to go ahead and share some of these trend lines with you. We have 1, 2, 3 touch points, and then a drop, and we had 1 and 2 prior to that. So we have 5 touch points. This would be the 6th, I think. 1, 2, 3, 4. I mean 5 almost. 6. And right here at this yellow line, you'll see that the price rose off the bottom trend, but then rejected partially through the height of the pattern. This is called a partial rise. Bukowski says, hey, this is a very bearish signal, and it is very bearish. You can see the price then fell through. This is the monthly VWAP, or it's 30-day, I believe. And the price sank. There was a gap down, a push up, and generally this would be really bullish, but the price wasn't able to close above the prior day's close, or it was very close to it. Really, this, you'd want to see this candle close all the way towards the top or close, you know, try to move up into the body of that candle, maybe even above a prior day's low. And it didn't do that. And then we saw a gap down, dump, and then again today, big dump, big dump. And I think that the SPY may be on its way to a lower level. $448 is the price target for the broadening ascending wedge, and the head and shoulder top would have a target of 434. This arrow would show the right shoulder. The left shoulder would be right here. As you can see, those price levels are very similar. And this broadening ascending wedge trend line almost shows the armpit. So if I move it to make it the armpit, I'm just going to take the right side and go right here. So my touch points are there and there for the armpit. And it looks like this is still a little sloppy. At any rate, it doesn't really matter. You can see that the price has broken through and closed below that level, even after coming up and wicking above it. So this is a confirmed breakout. It is possible that the price may pull back into the pattern, but this is very bearish, and given the scenario with the way the Fed is getting all vocal about interest rates rising and some other stuff, you know, coronavirus and yada yada. Overall, I think that it's very possible we can see this correction that a lot of people have been waiting for a really long time. And it might scare a lot of people, but I don't think it's going to go very far, at least not initially. I mean, what's the RSI at? The RSI is falling, and it is approaching the oversold area, right? And implied volatility is starting to creep up, okay? But it's really nothing that drastic. I think a moderate fall here, a bear market is coming, and it doesn't have to be this big tragic thing. It can just happen and be okay. And I think that's what's going to happen. And there might be some overreactions during that time that might cause some market volatility, but I think it'll be short-lived, and there might be some bumps and bruises along the way for those that do succumb to their fear. So remember to use your head. That's what I do. So that's where I'm at with AMC and the SPY. I'm ready for a downtrend tomorrow. If there is a surprise reversal, of course I'm going to get burned. That's totally fine. I kind of just, that's just, you know, that's just the game. And I think I covered everything I wanted to share.